Alright, I'm back to explain how to use Fibonacci retracements. I'm just recording this one pretty much like 10 minutes after I just uploaded the other one. By the way, don't mind the AI thumbnails. Like, it keeps making different ones every time. Like, I'm telling you, stick to the same template and it makes my face look different. Like, it's whatever though. I don't even care. Alright, let's just skip that right there. So we're going to break down this Fibonacci tool, and before we do anything, I'm going to share my Fibonacci tool settings so you can take a screenshot, copy them, and because yours is going to look different than mine, but this is what mine looks like right here. So you feel me? Take your little screenshot, and this is all you need. Like, these other ones don't matter. They stay the same. It's just this right here. Alright. I'm guessing you got your screenshot, so I'm gonna just close it. So most traders, they draw the Fibonacci wrong, and that's why they lose money. In this video, I'm gonna show you how to use the Fibonacci retracement tool the right way, so you can predict where price is going to reverse. Today we're gonna break down one of the most powerful tools in trading, in my opinion, the Fibonacci retracement, aka the Fib. This tool helps you identify where price is likely to pull back before continuing in continuations, like I was saying last video, downtrends, uptrends, whatever. And once you understand that, you're going to start seeing the market move with way more clarity. You're going to get like tunnel vision when you start to understand the Fibonacci. And the Fibonacci comes with a sequence of numbers, but I'm not here for no math class or whatever. All you need to know is the market moves in like wave patterns, push, pullback, continuation, and the Fibonacci helps you measure how deep the pullback might go and how big these moves are going to be. When you drop the Fib tool on your chart, you'll see levels like, I'm gonna just point out the main ones. You're gonna see the 0.236, 382, 618, 786, and stuff like that. So this is where most people, I'm going to explain now where most people mess up using this tool so you don't make the same mistakes. In an uptrend, you draw from the lowest point. All right, let's find a clear. Excuse me. In the uptrend, you're going to draw the Fib from the lowest point, from the swing low to the swing high. In the downtrend, you're going to draw the highest point from the swing high to the lowest point, the swing low. So now, I'm going to show you this. You can do it. I usually do it in small legs. I don't do big legs because once you do big legs, you got like too much information, and you don't get like a clear passage to your trade, let's say. So on an uptrend, you place it from the swing low to the swing high. On the lowest point here to the highest leg here, like here, let me just go into replay mode. You can just start here. Wait, why is it? Okay, there we go. It was being weird. So let's say we were, where did I place it? Here. So if you were looking at real data, it would be something like this. You place the Fib at this low here to this swing high. And like I said, I've been saying this whole time, higher highs, higher lows, whatever. You know, in an uptrend, there's going to be a pullback. Then you go here, and you can see how it retapped this level here in the fib, and it continues the trend up. Usually in my trades, I wait for it to tap the 0.6 or the 0.5, somewhere in this area, to get the best price point. But you can use it to your liking and your comfortability or whatever. So when there's a new leg high, you adjust your Fibonacci, and let's do one more candle here. So you can see now it's continuing. It made its staircase step, and it's going to continue the trend and whatnot. And now I can show you this. Let me just go over this one last time. You grab your Fibonacci, place it at the lowest point for an uptrend. This is for an uptrend. I'm going to do downtrend after this. Uptrend. You can put it at the first leg here. You could have entered off this one when you see it push down here, but let's say you don't like it. I'm waiting for the next one. Pulls back out of this gap here. I like to call it like the little gray zone. You don't really want to take a trade when the candle's in there, a continuation trade or a reversal trade or whatever. You want it to come down into one of these levels. It doesn't come into that one. Put it up to this one, and now you see it had came down to this 0.5, and that's somewhere where I would take a trade between this 0.5 and the 0.6, and you see it just rallied back up. And let me just show you one last example here. Put it on this leg up, comes down into this range. The lower it goes, the better price discount you get. But you could also, it's whatever time frame you're on, the legs are going to look different. Place it on this low here, comes down to the 0.5, and we can see how it plays out. Oh my god. Alright, let's just forget about that. I just fucked up the whole thing. Alright, now let's explain the fib on these downtrends. This video might be shit. Oh my god, it's all good. If y'all got questions, just send me, text me on the Discord. This video might be shit. Let me know if it's ass. Just be brutally honest, cause I'm trying my best. But here we go. You see this leg. So now we're on a downtrend. So you draw from the highest point, swing high, to the lowest point, swing low. You could do something like this. And now you see when you place the fib starting on the top, you see the key levels I was telling you about are now up here because you're in a downtrend. So if you want to sell, you're going to get the discount up top because it's reversed now. You see price essentially taps the 0.5, and it rallied all the way back down. Tapped the 0.5, and it rallied back down. Let me just show it to y'all one last time. Let's look for a good downtrend. So I can show you on multiple. The highest leg here, which this would have been insane. Comes back all the way, almost all the way back to probably you would be in the red here if you were to enter over here or whatever. But you place the fib, you see price comes to an insane discount here, taps a 0.786 almost back to the 1, and it rallies all the way back down. You come down here if you would like to catch a bigger move or whatever, which this one, I don't know how I feel about this one. It still plays out, but if you were to place it down here to this low after it made this leg, you see it taps the 0.5, rallies back down, comes back and tests the same area here, and then it finally just dumps all the way down. So essentially, break down what a fib is. It's like a graph showing you how much of a price how much of a discount price is at, and a lot of the time that's where the big banks or the market movers or whatever like to put in their positions when price is at discount, because when you sell when it's like a very high price point, there's a lot of room for profit. You know what I'm saying? There's a lot of room for profit. And if you sell when price is already low, there's a lot of room for failure. And vice versa. You want to buy low, because when you buy low, there's a lot of profit to be made up top. But if you buy high, you already capped out here, but there's a lot of room for failure down here. You know what I'm saying? So this is where most people make money from this. Price pushes up, then pulls back into the Fibonacci levels, and this is what you're going to look for. Price enters the 0.5, the 0.618. You see confirmation candles, support, resistance, VWAP, the other tools I showed you. You pair this all up. Then you enter the trade in the direction of the trend. It's called a continuation trade when you just find a good pullback in the trend and then enter following the trend. And this is called trading the pullback. Simple like that. Just trading the pullback, continuation trade. And this is like, here's how the levels level up. Like, here's how to level up instantly, essentially. Like, here's how to like take your trading to the next level using this tool. Don't use the fib alone. Combine it with structure, maybe some more confluences about the market structure like I did last video. The cleaner the trend, the better the Fibonacci works. Like, as you can see here, this is a clean trend, downtrend all the way down here, and you can see the Fibonacci played out perfectly. Enters the 0.5 and the 0.6 and just continues all the way down. Avoid using the Fibonacci on choppy markets like the consolidation I was telling you guys about, because you're going to get faked out like a JEW. The JEW fake out. I'm not going to say too much because I'm probably going to get banned on YouTube. But the most common mistakes is people just draw it on random moves, ignore trend direction, and enter without a confirmation. And that's how people lose money using the Fibonacci. That's how you lose money if you don't listen. So I think that's essentially everything for the Fibonacci tool. I don't know if I'm forgetting anything. Let me just think real quick. I'm probably not gonna even cut this out because, like, bruh, I'm not a YouTuber, you feel me? I'm just making these videos to help you guys. Help myself too. So if you actually apply this stuff the right way, Fibonacci can become your best friend. If this helps you, join the Discord. Drop a like, subscribe. And I'm going to continue to drop these videos probably once or twice a day until I eventually run out of stuff to make videos out of, which probably is going to be a little more down the line. But let's level up together. Join the Discord. I'm happy to help anybody. Any questions about this video or anything? I'm pretty sure this gets announced to the Discord, so if you have any questions, shoot me a DM. I'm always active. Peace out.